Hello, and welcome to your Daily 5. My name is Greg Harmon, founder and president of Dragonfly Capital Management. At Dragonfly Capital, we manage portfolios for clients in separate accounts using the concepts of technical analysis and options trading strategies to outperform the market using less capital and maintaining strong risk management. Find out more at dragonflycap.com. If you happen to be of the vein that you want to trade your own account instead, we also offer a newsletter that comes out with weekly trade ideas and daily earnings trade ideas. You can also learn more about that there as well. Last week, I posed the question, last month, I posed the question, has the Fed already gone far enough? And I think we should revisit that question with a part 2 going into this week. So the first chart I have to take a look at here is Treasury bond prices. And I noted last month that Treasury bonds had broken down, had fallen through their 200-month moving average, and were really breaking out of this multi-year long channel, this 20-plus year channel to the downside. We seem to have found some stability in the Treasury market now, and you've seen interest rates now start to move in the opposite direction. For example, 10-year yields have fallen from 4.2% to under 4% as we're looking at them now. So is this consolidation? Is this acceptance of the Fed being done moving where they are going to put short-term interest rates and its impact on inflation? It's one data point that suggests that the market might believe that that's the case. The second chart I have here is gold. And gold, we see on this weekly chart, has shown some consolidation from the last time that I talked back in this area here. So some support, a few weeks of moving sideways underneath its 200-week moving average, and then the last 2 weeks, a move back up above and a kind of a strong move. We see some profit taking going on today as I'm speaking, back down towards the 1750 range. And again, another possible sector, another possible sense that the marketplace is starting to think that inflation is under control. The one caveat here, the candle that's printing for this week is going to be a topping kind of candle, and it will happen at a lower high. So this could just be a false move that gives us a false sense of security, and we start back down and continue the downtrend. So not a full check mark in the column of gold believing that everything's done yet, but some possibility there. Moving on to copper. Copper, you can see, is a little bit ahead of gold in terms of topping out of its move. It did make a higher high, a short-term higher high here above the August timeframe high, back towards this retracement of the post-pandemic move back towards that 38.2%, but then sharply pulled back. And we've got this dark cloud cover, a Japanese candle formation that bodes for more downside here. So copper is definitely not on board yet, and copper is starting to think maybe even if the Fed is done, that we might still head into a recession. Next is oil. And oil, we've seen much more consolidation after this long pullback from the highs down to a touch under 80. As I speak, it's trading at about $79 today. So back at a retest of this September low, with our Bollinger Band starting to get tight too. That's often a sign that there's a big move about to come. If we look at momentum in this, we see a stall here at the midline in the RSI and now a move back lower. We see a failed attempt to cross up on the MACD and a move back down lower. This suggests that oil, it looks like it may continue to move lower. maybe it's time for the government to get back into the market and refill the strategic petroleum reserve at this point. Finally, I think what has been the linchpin of all of what's been going on recently, and that's the movements in the dollar index. So the US dollar index, I didn't talk about it in October, but you can see that it topped out here in the October timeframe and has been moving sharply lower. As I speak, it's still holding in around 106.50. It's been holding here all week. So maybe a pause in the move lower. We still have momentum in the bullish range. It hasn't broken down below 40 yet on the RSI, and we still have a heightened MACD. But what we do see here is a divergence, a negative divergence in the peaks of the RSI. And perhaps now the dollar index is finally starting to catch up to that divergence. I would suggest that you might see a move back towards these highs from 2017 and 2020, a retest of the essentially breakout of the channel that lasted for 5 years. So back to the 103.80 range. But maybe it'll take until a couple more weeks before we see a retest at that level. What happens in a couple more weeks? Well, it's a little less than a month from today that we get that next Federal Reserve meeting. And that Federal Reserve meeting, October or December 14th, Fed Fund futures now are predicting with 80% certainty that the market will only see a 50 basis point rise from the Fed, which would be another strong indication that they believe that that the Fed is close to pausing. Not pausing themselves, but close to pausing. As we've gotten a lot of rhetoric from the Fed governors telling us that they'd like to see rates in the 5 to 7% range, as opposed to the 3 3/4 range that we've seen recently. So a 50 basis point move would only put us up to 4 1/4. Fed Fund futures for the next meeting in February show another 50 basis points with only about 50% certainty. So the market, the bond market itself, is in a mode where it believes that we've seen the worst of the Fed's tightening, that the CPI and PPI prints that happened over the last 2 weeks are indicative of a strong move lower in inflation, and betting that way with their money. Now all we need is for the equity market to agree with that consensus, and it might be time to start looking at where to put your money back into the stock market. So that's my Daily 5. Thanks for watching.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.